Hi everyone, welcome to TradersTV. Hopefully you caught the last episode where we talked about some of the basic elements needed to trade the financial markets. Things like understanding price, time, long, short. In today's video, we're going to take it one step further and we're going to start talking about the different kind of market conditions the Forex market can be in, as well as cycles, trends, and support and resistance levels.
Hi everyone, it's Jitan here, and we're looking at the chart right now, and one of the key things I want to talk about today is understanding the different market conditions that the market is in at any one point in time. There's actually three different market conditions the market could be in. It's either in a trend, it's either in a range, or it's about to reverse. We're going to be looking at how to identify these market conditions through looking at the charts, and also go into some extra little bit of details about understanding how highs, lows, support and resistance levels can help you in your trading. So as you'll see here with the chart, this is a current chart of Euro against the US dollar. It's a live chart. This is actually today here. And what we can see is across this chart, we have a series of higher highs and higher lows. So what does that mean? Well, all that means is that you can see that overall, during that period of time, the market was actually going up, okay? However, it didn't go up in a straight line. It went up for several bars, came down for a little bit, then went up again and came down a bit. So what we call this cyclicity. We call these cycles, okay? The market cycles higher. And one way to analyze this is by looking at these most extreme low points and high points on the chart. And what you'll notice is that each time this high gets taken out and it starts pushing higher. Next time, this high gets taken out and it starts pushing higher. So what we call this, in an uptrend, if there are more buyers in the market overall, what we'll be looking to see is what we call higher highs, okay? And we'll want to be seeing higher lows. So each time the market comes down, yeah, the low does not penetrate the low from before, okay? This, for example, this low here, it doesn't penetrate the low from before. So we have a series of higher highs and higher lows, and that signifies an uptrend. And that's just one market condition, a trending market condition. This is where people or traders are happy to keep buying this market, in particular this currency, the euro against the US dollar. Okay. Now, just looking at the same chart here, we've just analysed one type of market condition. Remember, there are three different types of market conditions. You've got your trends, okay, when the market is trending. You've got your ranges, when the market is ranging, yeah, or consolidating is another word or term for that. And we also have reversals, okay, when the market is potentially due a reversal. Okay, so three different types of market conditions: trends, consolidations, and reversals. Now, in this instance, we just looked at an uptrend. Buyers were willing to keep buying new highs and the market kept on going higher. Great. We now have an insight that the market is willing to keep buying new levels. That means that this trend is solid and there's a higher probability chance of the market going higher. So that's what we'll be looking to do. Remember, one of the first things is that we need to have a direction to trade. Okay, we need to have that higher probability move of either the market going up or down at this current moment in time. And during this moment in time, the high probability move was the fact that this market was going up. Now, just sticking to this same chart whilst we have it on board, we've just analysed that this was a trend. However, at some point a trend is going to end and it's potentially going to turn. Now, in this instance, what we can see is right at the top here. So remember, in the trend up, each new high kept on getting higher and higher. Now suddenly, right at the top, okay, we don't have a new high. It took it out by a few pips, but it came back in. So we actually call this a double top. And a double top is the sign of a potential reversal. It's a sign that all the buyers who are willing to buy it here, maybe there's not as many left in the market right now. Okay, so in this instance, there's a very high probability chance that the market is then going to start to push lower because we have this double top. Where the market has been making new highs before, we've suddenly stopped making new highs. So now buyers aren't willing to keep on buying it that may allow sellers the opportunity to come into the market. Okay, so we can see just even on this chart here how a trend could then turn and change market conditions into a reversal. And now when you look at the chart of the euro, what some people may notice is, well, actually, Jitan, this chart is actually going sideways. Okay, let me just draw those lines on a little bit better for you. This market is actually now going sideways. So in fact, here on the way up, we had a trend. We were making higher highs and higher lows. Okay, suddenly we stopped making a higher high. That indicated a potential reversal. Okay, and now as the market pushed lower, because it's finding support at this support area here, we could say that this market is actually in a consolidation. So we've got the three different types of market conditions that any market could be in at any one point in time. Now, of course, market conditions are important because then we need to have the right strategy to get into the right market condition. There's no point implementing a reversal-based strategy when the market is in a full trend-based mode. There's no point trying to analyze or trade a trend-based strategy when the market's consolidating, pushing sideways, and not making higher highs or higher lows. So this is a really good example of an uptrend. Buyers taking it higher, suddenly losing momentum and going into a reversal and then in a consolidation. So we can see the three different types of market conditions. And you can actually see how levels of what we call support and resistance actually help us determine that. So the double top here is almost like what we call a level of resistance. Yeah, the market struggled to break above that level. At the bottom here, we had a level of support. Okay, the market struggled to break below this level. So in between this resistance and support, we can say the market is consolidating. Now, resistance and support levels, there are many different types of resistance and support levels, and we will be covering them in some of the videos further on in this series. Okay. So for now, what I want to look at is a downtrend. We've looked at an indication of when buyers are coming into the market, higher highs and higher lows. So now let's have a look at a downtrend, because one of the great things about trading is that we can also make money when the market goes down, something called shorting. So let's have a look at that on the chart. So before we look at a downtrend, I just want to look at this chart here, New Zealand against the Canadian dollar. And what you'll see is that overall, this market is actually in a consolidation. Did you guess that market condition? I think most of you were able to do so. Okay. How were you able to see that this market is in a consolidation? Well, again, we can see the clear resistance levels, the white lines I've drawn in, and the clear support levels. And the market is just trading in between this. Okay, it's almost trapped within this resistance, within this support. So we're in a consolidation. So now we know that kind of market condition. It's about having the right strategy to trade that market condition. Now, of course, this market condition isn't going to last forever. At some point, the market may want to break away from the resistance level and start making higher highs and higher lows and start trending higher. Or at some point, the market will want to break below and start trending lower. Okay, and this is what I want to look at today. So we can see right now that actually we have this support level here, and what happens? Suddenly, the market breaks lower. And what can we start to see developing? We can actually start to see the lower lows and lower highs that develop in this market. So an indication of a market going down is the lower lows and lower highs that we can see. And this is a good example of a market that was in a consolidation, okay, and then suddenly turned into what we call a downtrend. And the reason for that is because each time the sellers take hold of this market, they're willing to take it to a new low point, okay? And they're willing to keep on taking it lower. And this is the hallmark of the downtrend. So now we know we're in a trend to the downside, we can pick the right strategy to get us into this trend-based move going lower. Just one of the benefits of trading is the fact that if we're able to analyze the right market condition, then we can profit from a market that's moving up, which is the traditional way to do things. Buy and hold in the stock market. People will buy into companies and hold that stock. So we can do that in the foreign exchange markets, in the commodity markets, and the index markets as well. But the beauty about trading is that if the market is in a consolidation and going sideways, we still have an opportunity to make a return, and we can have the right strategy to trade that market condition. Also, if the market was to break lower and sellers take hold of this market and we start seeing lower lows and lower highs, we can actually make a return when the market is pushing lower. Fantastic. So we can cover ourselves in all three different types of market conditions. And that's really important when you come to trading. Okay, a lot of people are trading for either income or capital growth, and it's important that if you're investing time and money into this, that you're able to find enough opportunities and be a well-rounded trader in all the different market conditions that are available. So here's another really great example of different market conditions. As we can see here, the market was in a long-term consolidation for quite some time. Okay, and this is a weekly chart, so from 2015 to 2016, it was largely moving sideways. However, the market suddenly broke higher and it tried to go in a trend, okay, but then suddenly it started to come all the way back down, right? And then we can see to the downside, what do we have? We have lower lows and lower highs. So this is an example, this is a realistic example, okay, because we had a consolidation, the market tried to push higher, and it just wasn't enough momentum. Buyers just weren't willing to go with it. And then suddenly sellers take grip of the market and push it lower. Now sometimes you may have taken a losing trade right at the top. Trading is about winning and losing. Okay? In some other episodes that we go through, you're actually going to find out ways where you can actually lose more trades than you win, but actually still make a positive return at the end of it. Something called reward to risk, and something that will be in the risk management video, so make sure you do not miss that. But when we were just talking about the support and resistance levels, okay, we can see here the market has come all the way back down to that support level. Now we know that at these support and resistance levels, this is where potential reversals can happen. So we have been making lower lows and lower highs, but now we've hit a major level of support. There's a very high probability that we could start to push higher. Okay, now this is an early sign of a potential turning point, and probably is a little bit more for some advanced traders. Okay, now this being a weekly chart, typically a trader will then start to look at the time frame to trade, and on the daily chart we start to see that this market starts to exhibit higher highs and higher lows. We can see on the daily chart the market was making lower lows and lower highs. We've suddenly hit that big weekly level of support, and now what's happening? We're making higher highs and higher lows. Okay, so a potential change in trend, because remember, trends don't last forever. Okay, it's either going to be in three different market conditions. It's going to be in a trend, it's going to be ready for a reversal, or a potential consolidation. Our job is to identify the market condition and then have the right strategy to get us into that. Now this, as you notice, we'll talk about the platform in a few episodes later on, but I've actually already long on this market. And as you can see here on the trade terminal, I actually have a few positions here on the US dollar against the Swedish krona running to the upside, okay, based on exactly what I've told you. Okay, well, not everything I've told you, there's obviously still a few more steps that you need to know before you can actually take a trade. And again, we look for other confirmations, right? Now, this platform makes it a lot easier, okay, because there are certain strategies that are already pre-customized in here for us to trade with different market conditions. And we'll have a look at those in a moment. But first, I just want to have a look at another example of a trend to the upside. Okay? Now, the reason I'm choosing this example is because you won't always see picture-perfect trades. Okay? I want to give you the realistic picture of what a chart looks like. This is a chart of the Nikkei, the Japan 225. It's an index of all the largest 225 Japanese stocks listed on the Tokyo Stock Exchange. Okay? Now, as we can see here, the market was making higher highs and higher lows, and the market was going up. Fantastic. We have a trend, and we'll be looking to buy or go long. If we look at the first video, we talked about understanding the difference between going long and going short. Going long is when we believe the market's going to go higher. Going short is when we believe the market is going to go lower. Okay. Now, as you'll see here, we made the higher highs and higher lows, but then suddenly we stopped making higher highs. it actually started to make some lower highs, okay? And we started to get inside of this consolidation here. And the market wasn't making any higher highs, it wasn't making any lower lows. So that's fantastic, because then we're going to save ourselves a lot of time and money not getting involved in this part, or looking for strategies or a way to enter the market whilst it's in a consolidation, because we're not making the higher highs that we want to get the best quality trades on. Then suddenly the market dropped down. Now a lot of people will start thinking, oh well, now maybe we're going to get lower lows and lower highs, and we had to drop down, we pushed up, and then if we started to move lower, fantastic. And if we had lower lows, lower highs, we would get back on board with the trend to the downside. But what happened? We didn't get that. The market broke outside the consolidation, it came down, and then what happened? It actually moved into that level of support, as you'll see. In fact, let me draw this a little bit more cleaner. I'll use this nifty little horizontal tool here. So we can see that the market came into this level of support, which was all the way from back here. So now we'll be saying to ourselves, well actually, now the market may be setting up for a reversal. So what kind of strategies do we have to get us involved in this trade? Because it's not just about looking at these kind of cycles, trends and levels. We also be looking at other indications like price actions and indicators to confirm a potential move. But as you'll see here, from that reversal trade, or from the reversal condition, the market then suddenly started to make a higher high. We had a higher high, we had a higher low, and the market's been in a nice trend ever since. Okay, so this is just a realistic picture of how a market can go from a trend, making higher highs and higher lows, then suddenly go into a consolidation, break out of the consolidation and then turn into a reversal to then turn into a trend. So we've got all the different types of market conditions here, all in just one chart. And this is obviously very useful because sometimes people are just completely blind. Oh, what is going on? Where am I? And if, generally speaking, if you're confused when you look at a chart, it means you're probably in a consolidation because you're not making any higher highs or higher lows, or you're not making lower lows and lower highs. Generally speaking, the easiest charts to see will be the ones that you're in a trend on. Okay, so when you're trending, those are going to be the easiest ones to identify. So don't think you're doing anything wrong if you can't identify this, because maybe it's not in that market condition. Maybe it's in a reversal, or maybe it's in a consolidation. Too often I see people kick themselves saying they're not getting the analysis right, when actually there's probably nothing to analyze there. You just need to understand that the market's in a different market condition. That's all it is. So I talked earlier about how there's actually different strategies within the Smart Charts platform that help you analyze these market conditions so you can trade them most effectively. One of the key ones I want to look at for now is something called volatility reversal. And actually, this is a great strategy that we have, a great system we have to trade consolidated markets. As you can see here, a lot of the work is done for you. You've got these arrows potentially telling you to go take a long position or take a short position. Our job is just to analyze the market condition we're in and choose the right strategy. You can see that this market is going sideways. So within this sideways moving market, we want to be implementing consolidation-based strategies. Okay, and we can see here that simply we've got the signal setting up already for us. So if we're able to analyze the market condition, then the rest of the job can be relatively easy. Of course, there's a lot more to know about trading, which you're going to be learning about in the video series coming up. But the first and most important thing is really to understand the market condition you're in and how you identify whether it's in a trend, a reversal, or a consolidation. Because then that is going to dictate the kind of strategy you use to put on your trade. And of course, in some of the videos in the next episode, we're going to be looking specifically about how to place trades and how to use this platform, which does make life a lot easier. Especially from when I started trading 12 years ago, the way technology has changed the game has been phenomenal. It's definitely something you need to take advantage of.
Thanks for watching the video. We hope you found that of value. If you want to learn a little bit more on a one-to-one basis, then I encourage you to visit the link below and attend one of our workshops where you can ask questions live with one of our traders and get live feedback. Thanks for watching this episode. I'll see you soon.